waking up with the nightmare of all the toys that I wanted from the JCPenney wish book. They had a catalog where you just go pick out everything. And I had all the things that I wanted. And I remember waking up with just that nightmare of getting a sweater, a pack of drawers, and a savings bond. Turns out that I did get a sweater, some socks, and some drawers, and a savings bond. But those weren't the only things I got. I also got all the toys that were on the list that year, at least most of them. But, realizing that transition from a child to an adult and realizing that the things that you need aren't necessarily the things that you want. I mean, have you gone through that?
Absolutely.
That transformation where it's like you get to them grown man goals and it's like, what I really want is for my money to be cheap and my money to make more money than me. So today I'm specifically talking about giving yourself the gift of credit for Christmas as a cautionary tale. Because here's one thing about this time of year. I mean, Stephanie, we were talking about this the other day, how people take on extra jobs to pay for Christmas gifts. They go out and shop and overshop to buy things to impress people that they don't even like with things they don't even need. And so what I urge you to do is be cautious about your spending for Christmas. The seasons of the year are set up, we talk about this all the time, to extract the last bit of money from our lives. And it doesn't correspond necessarily with the spirit of giving, but with the spirit of corporate America getting the last money that we're going to make this year. And so I urge you, if you don't need it, don't get it. Give
Right.
them
Exactly.
actual sincere appreciation. And I'm not being a Scrooge. I'm just saying, make sure that we focus more on what we need so that we get to the place that the things that we have pay for the things that we want. Does that make sense?
Yes.
As we go through today's session, I'm giving the gift of knowledge, and it's specifically knowledge that I didn't have. I was looking back through, I'm doing some filing, and I looked back through to 2015. And 2015 was the first time I tried to refinance my home. And I got a rejection letter. Do you know why? My credit score was 616. And I didn't even know that. Has anybody ever gotten to the place where they needed to do something, wanted to do something, and they didn't even know what the score was? Write this in your notes if you're taking notes. You can't win the game if you don't know the score. You cannot win the game if you don't know the score. And I looked around frustrated and angry. I was like, why is my credit score 616? I pay my bills on time, mostly. I mean, we got real life situations like everybody else, but what I started to do, I just wanted to understand, because if I'm gonna score this low on something that is about my behavior, I want to improve my behavior. How many of you can agree that it's important to know what credit is and how it works?
Very much so.
Now, is my screen sharing coming through okay, Stephanie?
Yes, perfect. Go ahead.
But now think about this. Most credit in school. See, that's the thing that I know about all of us. I went through all the grades of elementary school, went through college, got both of the degrees, got out into the workplace, had been working for years. And you know what? Even at the point that I was getting what my credit score was or what went into it. And I was sitting at the barbershop. Shout out to Jeremy. Jeremy is my barber. Jeremy was like, they need to have the class you teach in school every day. I mean, every year through high school, they need to teach credit and money management and debt and reinforcing those things. I don't understand why they don't. He said, well, I told him, well, really, most people don't understand these things, and it works in favor of the system because the lower your credit score is, the more money the bank makes.
Agreed.
So as we go through our process, I'm just going to teach some basics about credit. I'm going to share some things practically that I didn't understand, so I make the assumption. You might already know it, but if you know it, just nod along like you didn't know either. And then I'm going to share some resources that help me, number one, understand and start to get control of my credit, and then to maximize my credit, and some things you can do starting today to keep your credit score as high as possible. Deal?
Deal.
Yeah. Tell me.
So credit, what is it? So first thing to know about credit is it's not history, it's a mystery. Credit score exists in a range anywhere from the low threes. So 350 is about as low as you can go where credit is. How many, did everybody know that?
Not before now,
To
until now.
850 is considered perfect. Now, it doesn't mean you're a perfect person. You just score perfectly on the scoring chart. But what you got to understand is the lower your credit score is, the more expensive things will be. So if you think about the chart where we are right now, anything under 520, most things that you apply for on time, you either get rejection letters or unreasonably high interest rates. Meaning, I saw one time someone that had actually been offered a car at 26% interest. 26%. That's
Yeah.
like on a credit card. But
Yeah.
that's what happens. They'll still approve you, and you will have bought that car 4 or 5 times because of what the credit score says. Now, the higher you get in range, once you start getting into 600s, 680s, that's where you'll get approvals that qualify you as what they call damaged approval, slightly damaged credit. And then you get to the 7s, especially the high 7s and 8s, you can almost count on approval. Like, you know how when Michael Jordan would shoot the ball and walk away?
Right.
Oh, it is.
Right. It's going in.
So, and here's what you got to think about though. Oops, I am missing a slide. Let me make sure that I did not leave that example out. So what goes into credit? Well, let's talk about the components. It's actually a percentage mix, and it's all of these things combined. So the biggest factor in credit is your payment history. Meaning, if you think about how you have paid your bills, credit bureaus. So there's 3 credit bureaus in America. You got TransUnion, Equifax, and Experian. Equifax is actually based here in Atlanta. I work for them. In fact, while working for them, my credit still wasn't that good. I just knew what kind of data was available because all of the banks that you ever make payments to, they report to the, and by the way, credit bureau is not a government agency. Let's make sure that that's clear. Calling
Right.
it makes it sound official, but they are a business. What does their business sell? Your business. Yeah, they're professional snitches. They're out there telling your business. You paid on time. Stephanie was 60 days late. Richard was 90 days late. The worse it is, the more quickly they tell it, and the bigger impact it has on the score. So payment history is the biggest portion of your credit score. Now, here's something to consider. For the average person, you can't, can you? Well, pause. Let's see. We'll talk about some things that I found out as I started working with professionals about things that you can do to enhance your credit history. Now, the second biggest component is how much money you owe. 30% of your credit score is you just owe this amount of money relative to your reported sources of income. So the more you owe, the lower your credit score is, especially relative to the amount that you can borrow. So say, for example, on this house, we owe right now $200,000. House is worth $350, but the balance due is $150. I still owe $150 on this house. Does that make sense? So it's a amount of credit that's available to you that's utilized. Then there are smaller pieces, but all of them matter, are type of credit, meaning what type of money you borrow. Does your, is it a mix of credit, meaning you got some mortgages, some credit cards, some auto loans, is it predominantly one kind or the other? 10% is any new credit you open. Yep, every time you make a purchase, it triggers what's called a hard inquiry, right?
Right.
Hard inquiry means your credit score is going to drop a little bit.
Wow.
And the way that they process it is kind of ironic, is if you inquire a lot. I was working with one of my clients who bought a brand new Lexus last month. and her credit score went down 100 points. Now, what happened? The dealership was doing all kind of things behind the scenes. They made 17 inquiries in a 2-day period.
Wow.
That's 100 points down.
Mhm.
And so once you start knowing the things that impact you, you can do two things. You can start to protect yourself. Oh, and by the way, the last one is the length of your credit history. Now, none of us can do anything about how old we are or how
Right.
much we borrowed in the time that we've been alive. But I do say the longer that you live and show consistent payment behavior, that little part of your credit score goes up. So again, just recapping, payment history, on time, how many times you pay on time, and they put way more weight on what you did recently. It's like Janet Jackson runs the credit bureaus. Like, what have you done for me lately?
Right. Right. But
Okay.
they do that to you, and they give it to you so early, give you all these credit cards, department store credit cards, to where they know you don't have the knowledge or the wherewithal to have use common sense.
Amen.
But that's where the
Well,
And
family
they
curse
do this
comes
to you
in.
so early in the game.
oh yeah. I mean, think about, you would not
Yeah.
imagine the
Yeah.
advertising budget that the major credit card companies spend college campuses. Now, why? Is to put that little viper
Right.
on early so that they're always attached to the income, even before that college student has a job. Like
Mhm.
Discover found me at Duke, and we both discovered I ain't have any money. And so, but here's the thing, because we were talking about people are always worried about scams and schemes and these kind of things. I said, this is worse than a scam, it's a racket. Meaning, think about this, the people with the least money tend to have the lowest credit scores. Therefore, they pay the most money when they buy things with credit. Now, I know people look around and say that
Right.
ain't fair. I'm just saying it's what it is. I'm just trying to expose what's happening. Now, the other thing, you see this 30%, the capacity, much credit you have available. So say, for example, you have a credit card with a $25,000 balance. Well, I'm sorry, $25,000 available. At one point, I had one credit card that had a $25,000 limit and a $23,000 balance. And I was making the minimum payment because that's what fit the budget. Does that make sense?
Right.
So I was on the rotating rat wheel where I was at the most in terms of, that's 80%, 85% of what I could borrow, I was borrowing. And the worst part, Stephanie, I don't even remember what half of that stuff was.
God, I did it too.
It's emergencies, it's out to eat, but then budget enough money. It's all those kind of little things that end up being a big thing. And because it's at a high interest rate, it takes on a life of its own. All of a sudden, that whole interest payment is only paying the interest, not the principal. You're not even paying them back.
Yep, and
Right.
that's the thing we don't
So
even think about. When it's a smaller number, that interest might be $10, $11. You're like, all right, no problem. But when you start increasing that budget or that limit, that max, they don't understand that the interest on that also goes up, or is from that percentage. So it's no longer $11 extra. It's
right,
now $75 minimum, $200 minimum. And those are huge chunks that come out of your regular paycheck, especially if you already are on the lower end or check to check.
exactly. And think about this, the last category, that 10% down there at the bottom, is that mix of credit. And what they say is your installment debt raises your credit score and your revolving debt lowers your credit score. Now, what do I mean with installment debt? Installment debt is going to be fixed debts. They call it good debt. So it'll be things like your mortgage or your car note or your student loans that will, at least from the standpoint of how you're viewed, that will be better than a high balance in a revolving loan like a credit card or a payday loan. Does that make sense?
Right.
Here's the danger zone. Right now, it's Christmas time. I want to train you with a patented sentence that I made up here in Atlanta, Georgia, because I know what's going to happen. You're going to get to the register with your gifts from Macy's. Would you like to save 20% off by opening a Macy's charge today?
I sure would. Go ahead.
Hell no, shout it. That's what I
It's
want you to
shouting.
say. Hell no, Shotty, no, no. Because two things have happened in that one transaction. By the way, if you do it, just expect you'll have a drop because you did two things. You accumulated new debt and you accumulated new revolving debt. It hits your score harder, but they do it right at that point of weakness, right when they know we're rushing around trying to get somebody the perfect thing, trying to save some money, trying to hold some things back. Save yourself the struggle and the aggravation. Just know ahead of time is what they call, is why they have the candy right there at the checkout at the grocery store.
Right.
So that your kids start begging right when you're trying to check out with, you already got all the groceries you need, but now you also need a Snickers and some bubble gum. I'm sorry. Same concept for the kids, but the credit is for you. So be careful. Be careful about the trap at the point of sale. So now the last thing, the good thing about credit is it can be built. Like one of the things that was so relieving to me, Stephanie, was just that idea that credit is a bruise, not a tattoo. If you got a bad credit score right now, don't worry, you can build back up to a better level. Here's the thing that most people don't take advantage of is the opportunity to get professional help. I believe in professional help because the professionals have helped me tremendously, meaning I already told y'all 5 years ago, I was in the sixes. I didn't understand. I learned some things, and by learning some things, I was able to do some different things. But I also got some help because I am still a software professional. I still speak professionally. I am not a credit professional. I just know what stuff hurts me. Because if you get hit upside the head enough times with a 2x4, won't you learn to duck?
Yes.
Miss that one. Miss me with that. So that's what I tell people. If you're out there trying to, especially if you've had some things in your life where your credit is actually damaged, there are professionals that can help. And rather, do y'all remember the show Pros versus Joes?
My brother used to watch it all the time.
For those of you that don't, it was a show they had professional athletes and like the kid that was the fastest kid from your high school. And then like have a foot race with Jerry Rice. And people look at it, they hype up how the amateur looked and all this. And you know what happened every time?
They lost.
Getting dunked by Shaq. I mean, what were you gonna do?
Right, against Shaquille O'Neal. Yeah.
That's how we look a lot of the times as amateurs when it comes to money, trying to go out and fix our credit or our debt plans by ourselves. Because you got to remember the two things: how much you owe and your payment history are the biggest pieces of your credit score. And we have a team of experts that actually helps specifically reduce the amount that you owe. And they can even help with things that are not so favorable in your credit history. How many of you know that the way that credit gets reported in America is so raggedy that many of the things that are holding our credit scores down shouldn't even be on there? So we put our team of financial experts on the case. And here's what they did for me initially. They got me to the highest credit score of my life. I got to an 810. I started losing my mind. I thought dark-skinned people couldn't have an 800 credit score. I was so excited. I was like, and they did it in two categories. In the score builder category, they really looked at the most negative things and the best things in my credit report and said, which of these things can we remove? And then with the score master, they actually told me, now, Richard, these are the things that you can do. Because I know there are a lot of people out there talking about credit repair. Credit repair only fixes things that is like a Band-Aid over a broken bone, meaning you can cover it up, but the underlying causes are still there. But when it comes to restoration, there's a combination of expertise and education that you need to have, but we've gotten great results. This is actually one of my first customers to sign up. And it's ironic. I was introduced to her by one of the other real estate professionals I work with. It's my friend, Natasha Johnson. She introduced me to Shamika Rich. We had 2 phone calls. First phone call, I sent her the instructions for how to sign up, how to get her information submitted. The second phone call was 30 days later. She said she got a 125-point score increase on her credit. And I always got to give a shout out to my man, Javon. Y'all got to hear this brother's story one day. It's amazing. Right now, he's at 279 points increase in his credit score. Now imagine getting close to 300 points puts you in a whole new buying category when it comes to qualifications. And you know what? I forgot to say, credit actually impacts more things than just how much you pay for money. It also impacts how much you pay for insurance. Yeah. So your car insurance, your homeowner's insurance, both of those are actually more closely tied to your credit score than the value of the thing that you're insuring. And do you know that right now, credit score actually is one of the majoring high criteria for certain jobs?
Yes.
You know, we were talking about this the other day. I mean, matter of fact, y'all got to meet Jeremy. That dude is so funny. He said, okay, now check it. I'm applying for the job because I need some more money. My credit is bad because I don't have enough money. I can't get the job because my credit is bad. It's like an ongoing reverse cycle, shifting people away from money. So understanding that it's that important and that crucial, one of the things that we do with our Financial Edge membership, and where are we on time? We at 30 minutes. So I spend 5 minutes sharing. I'm gonna tell y'all my business. I'm gonna share what my Credit Max portal looks like and how the experts have been working with me and Nikki on our credit over the past year. Any questions before I jump in on that? Anything else y'all want to share?
You touch bases on it. Biggest part would just being the credit. It isn't just a number. It's something that affects every aspect of your life. Everything you do is affected by your credit score. And some people don't even know they have or what their credit score is.
Right. So that's the first. Actually, that's the first thing. And it's ironic, Stephanie, that you say that, because most often I think you have the same result. Was that you that told me that? Most often. Oh, by the way, let me tell your business for a second, because we forgot, and this is important that people know. Stephanie is one of the few agents that you'll find that will actually work with people to educate them on the things they need to do to own their property. And in Milwaukee, Wisconsin, and one of the things that she found was most people aren't taught the things in school they even need to qualify. So they'll show up needing some help with credit. And you ask them, what's the question? You say, what score range you're in right now? And what do they say?
Lowest I ever got was an 11. Now, I didn't even know you could get an 11.
Wow.
We just was told that the lowest number was 300. So the fact that they said they had an 11, just one showed that they had no idea what a credit score was, and that they knew that it was bad and that it was disqualifying them from a lot of things. But now it's a point in time where they wanted something that they had to really work towards it to get what they wanted.
Exactly. And that's the thing. I think most people say, I know for me, they asked me at the time, do you know what you're said? I don't know. I think it's all right, though. I'm a good person. I pay my bills on time. Or people that come looking for help say, I don't know what it is, but it's bad. Mm-hmm. But write this in your notes. What gets what gets measured can be tracked, and what can be tracked can get tended to. And what gets tended to gets done. If you're not tracking, you can't win. It's almost like trying to go out and play a football game without ever looking at without knowing what the score was or what things counted to increase the score. So with our comprehensive credit restoration, write that word down. I don't want anybody going out here saying, Richard Hardon, I do. No, I don't. I don't do any of this. I have a team that does it for me, and I just tell people about the team. But think about this. Credit Max, credit restoration starts with just knowing the score, having your reports and scores on a monthly basis, because that's about how often your credit picture changes. Then with the credit restoration system, they do look at the things that are negative on your history and are strategic about removing anything that's illegal, illogical, or poorly reported, so that at least the history that you can affect gets affected correctly. And then they talk about credit rebuilding, adding strategies for doing things like you talked about, Stephanie, potentially adding trade lines, adding new intelligently, adding your rent to your reporting, which for people that are trying to buy a house, that's a big deal, or adding installment credit, so that in addition to working on the history, working on the things that have been done, and knowing where your score is today, being in a position where, imagine this, you want to buy a house, but the biggest bill in your house, you're not even getting credit for it on your credit report. Now there's a way that using our team of experts and our system, that becomes possible to you. And then what I love to point out is they're always working on it, meaning they started working with me in December of last year. I uploaded my license and my 3-bureau credit report. And then TransUnion started sending me letters. I read the first letter. Oh, as a matter of fact, it's over here in the chat. I asked them, I don't know what this is. They said, you're not supposed to. Just send it to us. We know what to do. So every time TransUnion sends me a letter, I send it to them. They're ongoing, working on my behalf on credit, but I'm in control. I can still see through our partnership with MWR and Smart Credit to know where I am, what I can do, and where to go. So as of today, now, again, 805. Current credit score today, 805. There are no extra points that they can add to my, by the way, I've worked the system for a year. So with the score builder, they actually look at under the covers, all of the things that are negative on your credit report and get them removed. Now, the good thing is I no longer, this has changed over time, but I no longer have negative accounts reported. They got all of that straightened out. Again, they didn't change history, but they did change the reporting. Now, the other things they talk about, well, what else can you do? What actions can you take? But my favorite feature actually, Stephanie, is this score master.
Yeah.
Where it actually looks at what your score is today and what the impact of what you're spending is, and specifically when you need to do it.
That is my favorite part.
So up until now, the creditors have just been reporting on us on their schedule, but it literally tells you when this particular card reports, so that I know that if I get in my Discover payment today, in the next 5 days, I'll go up 1 point. But also, should I decide to spend $27,000, I'll drop 29 points. So you can do the what if game and kind of use credit as a strategic advantage versus not knowing what the score is.
And that's one thing that really helps, because some people, they have their payments or whatever, and they try and pay them. They say, okay, well, let me pay it early so I can get these things. But if you don't pay it when they're pulling it, it doesn't even count. It's been a lot of times where I've tried to pay it early or pay more on it, and then the statement didn't close. So then I still owe my minimum payment when it's due. And I'm like, I just paid you some extra money.
It's so frustrating. Right? It's like,
exactly.
You know what it's like. It's like when somebody lies on you and it's like, but I already paid you.
Right. But with this system, I like that it says pay this in 5 days, pay this in 10 days. So you don't get caught up in that. So that way you can make your money really work for you. You're not over. Not saying you didn't have to pay the bill anyway, but a lot of times you'll end up doing it to try and help you out, and you'll end up setting yourself 2 steps back just because you have to pay it again when the cycle closes.
Yep. And as you're looking for a partner to help with the process, understand the more that you see, the more that you can do in using credit to your advantage. So I don't think it was until I got access to this system that I knew there was a difference between the overall credit score, how the auto company was scoring, and how the insurance companies were scoring. But being able to break down what goes into that, how they factor, how they decide what your credit auto score is, for example, what you qualify for and what you can get, so that when you go to the dealership, you know, this what's about to happen. And then the last time, so this is, is I think about my time, and this will be the last thing I point out in this, 2 things over here. Knowing the score and knowing that it changes, and always having a team at work works for you. And I'll teach you some things I learned during time. So by the time we figured out how to pay off the debts, we got into the mid 700s, and they got our score up to 810. So I was finally able to refinance the mortgage on this house 5 years later, right? But if I had experts helping me 5 years ago, I could have done it then. Because at 810, we were able to go from 5.75 down to 2.65% as our interest rate on this house. That saves us about $700 a month. Credit determines how much you pay for money. Predictably, I refinance something. If you buy something, your credit score goes down, right? How about this? I went down, but it got me right back up to 810. So in June, I paid off all the credit cards to 0. My credit score went down, and then I bought a car and added a credit card, and we got a timeshare. All of that. We did all the buying we were going to do this year. in July, June, and it shows up in July. But imagine this, over time, we got back to here in September. I paid off the car that we bought in June because our Equity Max partner that helps with the amount that you owe, our debt elimination strategy, and then back to 810 in November. And I'm not saying I'm good. I'm saying they're really good at what they do, helping us maximize our credit, getting our credit to the best point possible, while at the same time, our Equity Max services help people get out of debt in record time. Now, that is our time for Money Lunch. Ladies, is there anything else? Oh, there's one more thing we should share, but is there anything else that you ladies want to share about your experiences with Credit Max and what they've done for you? Because both of you have some actually really amazing stories.
Yeah. Well, I've learned a whole lot, because I did not know. Once you showed me the tools of how to go into the Credit Max and to be able to the report, like the little auto builder thing that shows you like when you should pay things on time and when, at what point, how much you need to pay. And so I learned that much because I didn't know. I just did nothing, and that's not good to do as well. I knew not to get the credit cards when they offered it to me, and so I didn't do that. So that's what has been my saving grace before learning this tool and being introduced to Credit Max. So I'm well on my way to the 700s, out of the 600. So I'm well on my way.
And knowledge is such a big key. Like what you said there,
Right.
Chantel, is people do what you did, meaning I don't know what to do, so I don't do anything.
Yeah. So I don't do anything. Yeah.
Nothing like having
And that's
somebody
not
to
good.
ask, nothing like having somebody to ask that can tell you from a position of strength what to do. Because I know for a while I was asking the wrong people.
Yeah.
You know what they were telling me to
Right.
do? I don't know, Rick. Sound like you need to go back to school. You need to make
Wow.
money. You need to get another job.
And that's always been the response. Like one thing I've learned in this whole thing is that credit is a journey. It's not a destination. You're gonna have highs and lows, but as long as you don't plateau, then you're fine. Because it can always be rebuilt. One thing that I was able to do is every weekend I used to go to my granny's and we used to go shopping. And every time we went shopping, she would pull out the card. So I grew up to believe, swipe it. That's just the way it is. So that when I got older and I didn't have credit when I wanted to go buy a car and go buy my first house, I said, okay, well, let me establish it. Got my credit card. I did good. I did the whole under 30%, everything else. But one thing about that is that opens the door to one more, then two more, then four more, then five more, then store credits, then 20% off for Christmas. And it gets to the point that they tell you to have a lot of credit cards, or a lot of diversity is what they call it. But then you hit all these cards to try and hit these 13 accounts. Don't do it. Just don't do it. Because every month now I pay my regular bills and 10 other people just because I wanted to take that out. And if I didn't have to pay those 10 people, I would have a whole lot of money for myself. So I was a kid, but I grew up and I was able to put my stuff into the system, and they were able to take off the stuff that was negative. And they were like, okay, we'll pay these bills and you'll get an increase of 115 points. I was able to do, well, I will be doing that within the end of the week. And so for Christmas, I plan to be debt free because saving that money from those 10 people is really what's been hurting me for the last 5 years. I've been paying for stuff that I don't remember what it is, and the interest rates are ridiculous. You can make a payment of $80. They'll hit you with an interest of $75, meaning you only paid $5 towards your past balance, and you still got $1,000 left to pay.
Exactly.
Right. The same with the student loans.
So things happen. Life has its ups and downs. You can't stop it. So if you have to spend it, go ahead and spend it. Spend it responsibly, so you don't end up in this hamster wheel of being more in debt because you got in debt once.
Right.
I've been to the point where I've had 4 jobs. It's just something that you don't have to necessarily make more money. You have to know how you're spending your money responsibly. So if you're going out and buying J's every week or anything like that, instead of doing that, pay off your credit card, or instead of putting that meal on that date, just pay it in cash. There's a lot more power in cash, but we aren't taught to have cash. We're taught that we don't have any cash. We have to go to somebody else for cash. So one thing that you can do is develop your own cash by stop doing the credit cards.
Right. So, so let's wrap up today's conversation and give everybody the gift that we promised. Whether you decide to get help from us and our team, celebrate success with us. Oh, by the way, speaking of celebrating success, those of you that want to join us for the success celebration, yes, we party about the profits that we keep this Friday at 6 p.m. Text or inbox who you're watching this video from. So wherever you're seeing it, they can get you the info and access for the celebration, but also to get the team working with you to get your credit in the best shape possible. And one thing is 6 things that you can do to make sure that now that you know the score, you're doing the things that it takes to keep your credit at its highest possible level. Now, number 1 is intuitive, but I want to make sure, I know the small print you won't see, so you have to text me for us to send you the document, but pay your bills on time. Number 1, pay your bills on time. If you're writing notes, put that down. Pay your bills on time or early. Early is on time and on time is late. Number 2, use a service that monitors your credit report. See, too many things, especially in this whole internet and identity theft era, some of the things that are on your credit report might not even be yours. Somebody will steal your, breaking your house, they'll steal a TV. But they mess around and steal your identity, they'd be done bought a warehouse of TVs and you'd have no idea. So make sure that you're monitoring and keeping score. Number 3, keep 50%. Really, in my opinion, keep at least 70% of your credit limits available. Meaning if you got a card, don't be like I was. Don't have a $25,000 card with a $23,000 limit. That's not smart. Cards are, because credit utilization is a major part of the score, keep that old credit card with the 0 balance open. It'll keep your score up. I'm not saying use it. I'm saying pay it off, put it in a freezer in a Ziploc bag. Limit opening new accounts. Don't buy a whole lot of stuff all the time, especially all at one time. Does that make sense? So right now, every store you go into, they are going to ask you, would you like to save 10% off your purchase today by opening a card? Do you know why? Because they'll make 400% on that purchase by you having credit over time, and it'll drop your score. So limit or don't open new accounts. And then number 6, think twice before co-signing. And after you think twice about it, say no. Think twice about co-signing. And after you think twice, say no. A professional has already determined that that person does not have the tendency to pay that bill on time. And if they don't pay, you have to pay. And if you can't pay, your credit takes their hit. I know you love them enough to say, no, my brother, you've got to get your own. So with that being said, that's our money lunch. We gave you good credit for Christmas. This has been Richard Hardon, Educate the Owns, Stephanie Stewart, and none other than the ATL original Miss Chantel Jones. Want to thank you for taking time not to get just some food, but food for your finances with us on that Financial Friday Money Lunch. Y'all have an awesome weekend, and ain't nothing wrong with sweaters, socks, a pack of drawers, and some savings bonds.
And a savings bond.
All right, let's see.